Well, welcome to the show, James Carey. How are you?
Good, John. How are you? Happy to be here.
Thank you for joining me. So you are working currently at a family office. It's not private equity, it's family office, but you've had years experience in private equity and buying companies. And now you're head of acquisitions at the family office. So let's go rewind a little bit how you got into this M&A world and private equity and then family office. How'd that start?
Sure. Yeah, no, that sounds great. That's actually a interesting way I got into this, which was almost 18 years ago. So I'm originally from the Northeast. Like many folks that live in Florida, I moved here from somewhere else. I did that a while ago, though. Obviously, there's been a lot of folks that have moved here over the last couple of years, but I've been down here for 20 years now. So I'm based in South Florida, in Miami, and I actually got into M&A and private equity kind of by happenstance. I was working in mortgage banking right out of undergrad. So I was at a bank that was in the mortgage lending industry. And this was obviously, I don't know if you've seen the movie The Big Short, but this was right around that time. So the short story is that we were selling all of our paper to Lehman Brothers. They went under. And then the next day, our firm went under, even though our CEO wrote us a very nice note saying that that was not going to happen the night before. So I was, like many other professionals in the industry, similar to the movie The Big Short. I did go to a couple job fairs, and I actually got a call. I was a young kid at the time, and I was like, well, maybe it's time to go back home and kind of, I don't know, figure something out. And I actually got a call from a friend saying, hey, I know of a group that's looking for, a guy like yourself with finance experience, but has kind of a little bit of a business development edge to him, and kind of, he's more of a people person than just a numbers guy. And sure enough, I got an interview, and prior to the interview, he said, hey, have you heard of a company called Blockbuster? I'm like, of course I have.
Oh, of course.
Have you heard of AutoNation? Of course I have. Well, it turned out to be Wayne Huizenga's family office, and then his one of his funds called New River Capital. So I was fortunate enough to land there, and that's really where I started my career in M&A and investing in private equity. So was there for 4 years, and then was off to HIG, and the rest is history, as they say.
Yeah. So Wayne, I've read his the autobiography about him, Wayne Huizenga. He's done over 800 acquisitions, including Blockbuster, Waste Management, and AutoNation. Just an incredible M&A machine. Yeah.
Yeah. No, I mean, classic buy and build strategy, and I learned a ton working with him. I mean, a lot of folks are like, well, did you end up going to grad school? I said, no, I didn't need to. I worked with Wayne Huizenga for 4 years.
Yeah.
He truly did have this model of buy and build. I mean, Blockbuster was a perfect example of that. Waste Management was a perfect example of that. And so was AutoNation. I mean, I think he was only one of a handful of individuals that has brought in four Fortune 100 companies. So he's four Fortune 500 companies, excuse me. He's built 4 Fortune 500 companies. So that's 2 or 3 more than most. And he was a hell of a guy. He's obviously no longer with us, unfortunately, but what a hell of a guy. And also just did a lot of philanthropy and was a big pillar of the community in the Fort Lauderdale area.
Yeah. And then you went off to HIG, which is now a $60 billion fund to buy companies. Not small at all. Yeah.
Not at all. No.
What was your role there?
Yeah, so I think when I actually started there, believe it or not, we had $6 billion under management. When I left, it was just under 30, and now the fund, like as you mentioned, it's well over 60. So HIG is a global private equity firm. We did all types of transactions. We did everything from large corporate carve-outs. I mean, you name it, we did it. We were very industry agnostic. I think there were hundreds of portfolio companies when I was there. So I basically did it all when I was there. We looked at all different types of companies, all different types of businesses, sizes, industries. And so for me at the time in my career, it was a fantastic experience. It was really kind of where I cut my teeth and really grew as an M&A professional. Just doing the sheer amount of deals that we did on an annual basis. Really kind of saw it all and got to learn a lot. I mean, I still have a ton of close personal relationships at that firm. And then there's been a lot of folks and individuals now that have spun out and done their own thing. So it's really been interesting to see where everyone's kind of landed over the years. But for being there for for 7 years, it was a great experience.
And then you jumped over to Peterson Partners?
Yeah. So then I was at Peterson Partners, and they were based in Utah. And so, yeah, my fiance, now wife at the time, I told her the story. I'm like, yeah, I'm going to go out to Utah. I actually started in January. Being from Vermont originally, I'm an avid skier and snowboarder. And I'm like, oh, it's fine. I'll be coming back and forth every other weekend. You'll see a lot of me. Well, she didn't see me until April because the snow was so good that year that I was.
Snow is good. I mean, I've skied in Vermont and skied in Utah. Snow is great in Utah.
Right.
Yeah.
No, I think it's some of the best snow on earth. And Snowbird was right, very, very close to our office at Peterson Partners in Cottonwood Heights there. So it's actually a funny story. The first day, it was like a really, really bad snowstorm. I'm relatively new to the firm. I get there, 8:39, and I'm looking around. I'm like, where the heck is everyone? And sure enough, everyone was on the mountain. It was like a snow day.
Yes, I made the right decision.
Yeah, well, I didn't know that though. I was the only guy at the office, and then everyone, skis in the morning and then just comes in at after
he's
lunch.
from Florida. We don't need to tell him. He probably doesn't ski. Yeah.
Exactly. And then, yeah, I was there for a couple of years, and it was, great firm, great guys. Just for me, being from Florida, a lot of back and forth, and did not want to move to Utah full time as much as I love it out there.
Yeah.
And had known Len Pagan at NextSparc, the firm I'm at now. I've known him for a while, and we had been talking about doing something. So just timing worked out really well. So I partnered with Len after that, and that was about 4 years ago. So. So that was my transition from private equity officially to a family office.
So let's really get into what the difference is to private equity and family office. I mean, everybody knows the 100-foot, 10,000-foot view that private equity is somebody else's money, it's an institutional money, et cetera. And then family office is high net worth individuals getting together, representing a family, or they're the individual itself, it's their money.
Correct.
Right.
Yeah. So I'll try to give a pretty basic breakdown for the group, because there are a lot of, misnomers out there. So there is still some type of confusion when it comes to what is a family office. Now, a family office can take on many different shapes and forms. Our family office, we're professional investors. Okay. So for all intents and purposes, we act and feel like a growth equity firm or a traditional private equity firm. But we are different. We are much different because where our capital comes from. So the majority of our capital comes from NextSparc's founder, Len Pagan, my partner. He had a very nice exit in 2009. He sold his business to a private equity firm. Then that business was subsequently sold to a publicly traded company called Publicis. So public transaction. He did very well on that, and started NextSparc.
So that was his second to buy the apple. Yeah.
He did have a second bite of the apple. He did roll some equity. So he obviously had a liquidity event up front when he sold to Lindsay Goldberg. Lindsay Goldberg merged his company called Brulante into one of their companies called Rosetta, not Rosetta Stone, a different Rosetta.
Yeah.
And then that entity was acquired by Publicis for over $600 million in cash in 2009. And so NextSparc was born after that. Len will tell you that he played a year of bad golf and then got pretty bored and then really started doing some investing. So the majority of the capital comes from Len. The other capital comes from myself and my two other partners. There's 4 partners at the firm. So we don't raise outside capital. We don't really necessarily partner with other family offices too much. We have enough liquidity and capital that we actively put that to work like a private equity firm would. I would say the main difference between us and private equity is that because we have not raised an outside fund from other investors, so we don't have any limited partners, we don't have other investors that we're managing capital for. So traditionally, a private equity firm will raise a $250 million or $500 million fund from a handful of institutional investors and a bunch of high net worth individuals. Well, those folks expect a return on their capital, and they expect it in a certain time frame. Because I don't have any pressure from LPs, because I don't have any, I don't have to do deals if I don't want to. So I don't have that artificial pressure of doing deals just to do a deal. So I think the main difference between us is that we truly invest in people versus just investing in great opportunities. I'm not going to do a deal just to do a deal because it's, I can get it for 10 cents in the dollar or something along those lines. I do not do that. We really truly partner with individuals. We back founders and entrepreneurs that we have shared vision, and we frankly like working with.
So what do the acquisitions look like, the cap stack? I mean,
for us, yeah. And then another difference too, John, is that for us, because I don't have LPs, I don't have a fund, I can frankly do whatever I want. So I can structure deals in and around the founder's needs, right? I can do minority investments. I can do majority investments. So we basically work with founders and entrepreneurs and management teams to structure transactions in a way that's favorable for both sides. We don't just write checks and say good luck. That's not our style at all. There are some family offices that do that. We're set up differently. We have, I think, almost 12 employees now. We're all investment professionals. We all have an investment background. My partners have long history in investing, as do I. So we're set up like a traditional private equity firm with all the tools, the investment team, but we do act a little bit differently because, again, we're not really returning capital to anyone else but ourselves. So we can get a lot more creative from a structure standpoint.
Yeah. So when you return on capital and you're holding for longer period of times, are you actually selling the companies at some point, or are you just taking off the cash flow?
Yeah, good question. So we actually will underwrite our transactions or our initial investments like a traditional private equity firm would. So we don't hold on to companies for 10 years. There is an exception to that. We do have one company in our portfolio that we've been involved with for 12 years. That's an outlier, though. But we typically want to buy and scale and grow businesses and then sell them. So we typically don't make an investment unless we know we can make a difference, unless we know we can help. But our goal is to grow and scale the business, support the founder, support the management team, and then ultimately have a nice exit in that traditional 3 to 5 or 5 to 7 year window.
Yeah, I was looking on your site. You got 22 companies you own right now, and they all look a little bit different niches, different industries. Where do you get the expertise to say, all right, I see this company, it's doing $5 million. We can get it to 25. How?
Yeah. So I would say, yes, we have a pretty diverse base of companies. We are, I guess you could call us also industry agnostic, where, we are into private aviation and mountain biking. So those are two different major, two ends of the spectrum. But we also have a large focus on health and wellness. I would say the majority of what we tend to look at, given our background and experience, are, I would say, professional services businesses, business B2B, business to business companies, and tech-enabled services businesses. But again, that being said, we do a very, very diverse portfolio of companies. The reason for that, John, is because we're really all about relationships. That may sound cliche, but a lot of the folks that we invest in, we know we have prior relationships with, or we've known for a long time, or we've gotten to know over a 1 or 2 year period. And so we really, at the end of the day, are getting very comfortable with the business. We're very comfortable with the industry that business is in. And more importantly, we're very comfortable with the management team or the founder of that business. And so that'll allow us to invest in an industry or in a company that we may not have prior experience in. So again, for us, it really comes down to the people element here. And I would say that's the reason why we have such a diverse portfolio of businesses.
It sounds like a pretty broad criteria buy box. How do you create this deal flow? What does it look like? I mean, you can go on your site and go, hey, we're doing 1 million to 15 million EBITDA, but now you're talking about forming relationships that you just understand. And how do you do that?
Yeah, sure. So I would say, just, given my experience, I traditionally know a lot of the bankers in the space and players in the space. So we get the traditional deal flow from bankers reaching out to us, and we are on a lot of lists, right? So I would say, because we are a professional family offices, a lot of bankers look at us like a professional investment firm, i.e. a private equity firm or even a venture capital firm, because we do make minority investments. So we do get a lot of traditional deal flow from the normal sources in our industry, which are investment bankers and investment brokers. So I would say we do get a lot of deal flow that way. The chances, John, of us actually doing a deal in a broad auction process from a large bank are slim to none, just because, again, we're so hyper-focused on relationships and getting to know people. And in a traditional auction process, you really don't get to do that as well as you could otherwise.
Yeah, it's the overpaying.
Yeah. So then I would say, so a limited process or like a non-traditional where it comes in from an intermediary, like an attorney or an accountant or, a friend of a friend or a board advisor, things of that nature. We get a lot of deal flow like that. That'll come directly to myself or to maybe to my partner, Len, or to my partner, Miles, or my partner, Nate. And so we do get a lot of opportunities that way. And then finally, what I think we're also really good at, and we're also, this is a big differentiating factor for us, is that if we have an investment thesis, and we do have one right now in and around health and wellness, we'll proactively start reaching out to folks. We'll proactively attend industry events. We'll proactively market ourselves and say, hey, here's who we are. Let's get to know one another. We don't have to do anything right now, but we'd love to learn more about your business. Let's build a relationship. If we can be helpful now, great. And if it's 12 months down the road, that's okay as well, too. So we do a lot of proactive outreach, John, where we'll do a lot of research on companies in a specific space that we're interested in, and then we'll proactively reach out to them. I don't blindly cold call people. I don't blindly email them. I'm actually pretty old school, and I do send stuff through the mail, but it's thoughtful and it's not generic.
Just a regular mail campaign or what?
Yeah. Sometimes it's whether it's done through UPS or FedEx or writing a letter, things of that nature. But it's not generic. It is tailored to that company that I will follow up, with email or a phone call. And the whole firm does this. I spearhead most of it, but we all do it. And it's a great way just to really develop relationships. And in my experience, again, getting to know a team, getting to know a potential seller, or just an entrepreneur and a founder, and even working together in some type of capacity before they're ready to sell or before they're ready to raise capital. I think it adds a ton of value, and you really get to know one another, and you can form a personal relationship too as well. And you can say to each other, well, I really like working with you. I really like, this is the type of individual that I want to go have a beer with, or I'd want to go have lunch with, or go on a ski trip with, or whatever the case may be. And in my opinion, those make for the best investments.
Yeah. When you go find somebody that's actually interested in possibly selling and having a conversation, I mean, what are you looking for in their motives? I mean, are they, divorce, death, disinterested, whatever it is? What do you, or do they stay on for a couple of years like kind of private equity does?
Yeah, no, I partner with folks, right? So I want folks to stay on board. I don't think for us it's how can we add value? How can I add value? Typically, an entrepreneur, he or she has gotten to a point in their journey where, all right, I've grown my business to 10 million in revenue, but I don't know how to get it to 20. I don't know how to get it to 30. And I need some professional help here. I don't know how to implement a ERP system. I don't have a professional head of sales and marketing because I've been doing it all myself, or I am the CFO, COO, and CEO, which happens a lot. And
you're specifically looking for those arbitrage opportunities.
I would say that so because we can add a lot of value there, and then they can go and do what they're best at, whatever their best superpower is, whether it be running the business, running operations, running sales and marketing. So they can focus on growing and scaling the business. We add value. But ideally, John, we want to partner with individuals. We want them to stay on. We want them to be part of the growth journey. But we sit down in the beginning before we make an investment and say, here's what we want to do for the next 2 to 3 years. Does this work for you? And if it does, great. And if it doesn't, then it's not a fit for either of us. Yeah. So we were very clear on that from the beginning. And I think that's one of the things that we'll address. That's one of the first things we'll address going into an investment is, all right, what are the roles, responsibilities? What do the next 3 to 5 years look like? What's the ideal outcome? And if we're all aligned, we'll make an investment.
What's the the stickiest part. Usually it's around control. We're making an investment, we control it, or you're still in control, right? You don't want to come in and buy a company, buy 60% of it or 50% of it, and not have any control over the next 2 to 3 years.
Well, it depends on what type of investment that we're making. So again, because we do both minority and majority investments, control, I guess it depends on the type of investment. I'll start with a minority investment. So when we do make minority investments, again, unlike some other investors, unlike some other family offices, we don't just cut a check and say good luck. We want to be involved with the businesses that we invest in. So
Sure. Actively roll and saying, hey, we're going to go add products or services, or we're going to add more marketing, we're just going to spend more marketing, whatever it is. Yeah.
Correct. Exactly. Yeah. So if I make a minority investment, I do want a board seat because I do want to have a voice, right? We want to add value. I can't add value if if I'm just sitting there in the background twiddling my thumbs, right? We want to be involved. We want to help. I mean, we truly want to help. We want to help grow and scale the business. That's the whole point. If not, then it's just not an investment for us. There's plenty of firms out there that are happy of just saying, all right, here's a check in quarterly, and hopefully in 3 years things work out. There's plenty of firms that do that, and that's great. That's not who we are. That's just not our style and not our preferred form of investing. So
yeah, and I think it's hard to place a bet on individuals that I would consider goats that goes like, I'm just going to give you money because I know you're Elon Musk and can take me from 10 billion to 100 billion. Right. Thank you. That doesn't happen very often.
Right.
Yeah.
Right. Yeah. I couldn't agree with you more. So on the minority front, we'll have a board seat, but we actively work with founders and entrepreneurs. We're not as involved as if we were to make a majority investment. If we do make a majority investment, we'll set up a cadence with our entrepreneurs, our founders, where it's, hey, let's maybe check in just weekly. Here's a weekly report. Here's some of the KPIs. Here are some of the things that we like to look at. Whether it be, what are your sales for the week? What are your, goals for the quarter? Things of that nature. So we'll set up a normal cadence, a healthy cadence of communication. We truly believe communication is very critical. And we'll also, again, set up roles, responsibilities. What are we going to do over the next 90 days? What are we going to do over the next 180 days? And so we'll set up clear communication, clear action plans of, okay, here's what we're doing. Here's what you and your staff are doing. Here's what you and your team are doing. All right, do we need to hire a new CFO? Or how can we upgrade your talent? Well, I've been trying to look for a COO or CFO for a while. I haven't been able to do that for whatever reason. Well, we can come in and do that for you. And it's a very collaborative process. So again, we don't really do anything without, working together. Again, we treat everyone that we invest in as partners. It's not like
what do you mean you could do that for them, CEO? Do you mean you're going to go put out the go find a COO or somebody from inside? Oh yeah.
Well, we'll lead, John. We'll lead that initiative. So we have our whole network Rolodex of individuals in our network, and then we also work with traditional recruiting firms, right? So we can help them with that, where maybe a founder or an entrepreneur may or may not have access to that. That's something that we bring to the table.
How do you examine the opportunities? Like, say, there's Brad Jacobs just released his book, How to Make a Few $1 Billion. He doesn't look for anything unless I can 5X it. How do you look for, say, a business opportunity? And he goes, well, we can come in at this $5 million business. We could see that it's a 25er. Should be up to 25. How do you measure that and say, all right, this is a great deal. Clean books, clean financials, clean ethical individual. Now the TAM is a pretty big opportunity. Let's green vote, up or down vote it and go for it.
Yeah. I mean, I think there's obviously an initial screening that happens, and I think there are certain opportunities. I've been doing this for a while that I'll look at and just kind of instantly, have an attraction to, or instantly pass on. Just given,
I address that a little bit later too, because sometimes you fall in love with deals because it's cool.
Yeah.
And then there's deals that just make sense, but they're just boring, right? But they're great businesses.
Boring's okay, by the way.
Yeah.
Boring's totally okay. Boring is good sometimes, actually. And I actually think that's I've seen that trending recently, but because there hasn't been a lot of great businesses for sale over the last 12 months. But yeah, so anyway, I digress. So I think just initially to your question, John, there's an initial kind of just passes the smell test. This is something that's interesting or not. I'll know that in 30 seconds to a
Right.
minute. And then so it's kind of a quickly, just the amount of deals that we see or we come across, I have to make quick decisions. I can't just otherwise we just, we'd have a pile of deals and we'd never get through them all. So but then after we take a look at an opportunity, something catches our eye, we'll certainly dig in, whether read the materials, have various conversations with founders and entrepreneurs, really get to know the people there. And then, quickly make a decision where this is something we really want to pursue. And when we do want to pursue something, we certainly spend a lot of time doing that. Before we make an investment, just to wrap up your question, yeah, certainly we'll model everything out. We have our own internal models. We'll look at the TAM. We'll look at the total addressable market. We'll look at all the industry trends. We'll look at some of the competitors in the industry. We'll look at the whole opportunity as a whole from a macro level. So those are all the normal things that, again, a traditional private equity or venture capital firm would do. We'll do all that. And then again, but I think for us, can we come in and help professionalize the business? Can we come in? Can we add value? And can we envision ourselves working with these individuals for the next 3 to 5 years?
Yeah. When you come in to these off-market deals, they're usually not prepared with, a data room. How's that process go? And how long does it normally take? Like, well, that's just one more task I've got to put on my list because I got to deliver all these financials. I got to deliver this report.
Right.
When you go to an auction or an investment banker, they have all that ready for you.
They do. Yeah. So I have to, I sometimes play therapist too as well in my role, right? So, and it's a lot of prep. So I try to, hold their hands and walk them through what the next 30 days are going to look like. So I try to upfront, and I actually have a presentation that I use with a lot of first-time sellers, John, of, hey, here's what a data request is going to look like. And I try to provide them, John, with, a minimal data request in the beginning. I don't want to overwhelm folks because you're right. They're not prepared. It's going to take them time to put this data together. And the last thing I want to do is create another homework assignment or a homework assignment for them because they've got a business to run. So I try to make our initial data requests pretty light and just, provide me with enough information that I need in order to say, this is something I really want to spend a lot of time on, or, thanks, but no thanks. We're not ready now. I think maybe in 12 months we could be ready, or we're not ready for this reason, or we'd like to see you do this, or we'd like to see the business hit this milestone. So I try to be as transparent as I can with folks. I try to be as honest as I can with folks and provide as much feedback. But typically, if I am asking for a data request, it's because we are interested. We've probably had 2 or 3 phone calls. We've executed a mutual NDA. So we've had a very transparent back and forth. And so the data that I do request, I try to make it light. I try to make it minimal. It's just enough that I need in order to say, here's what a potential offer could look like. Are you interested? And then if they are, then we move forward with full diligence.
Yeah. And do they come back with all counter offer and playing the game?
Oh, I mean, yeah, absolutely. I think, I've had a lot of folks. So listen, these proprietary or off-market deals, in my opinion, are by far the best deals, right?
Right. Well, let me put some context to this because
Sure.
they probably never gone to market before. They don't really know what their business is worth yet. And there's this process of going, hey, we think it's worth this much. And they'll go, let me see if I can get another offer somewhere else, right?
Yeah.
Maybe somebody wants to give me more money and I'll just go through the whole process and hire an investment banker.
Yeah, no, absolutely. So this happens a lot. What'll happen is, once we're having conversations, because again, it's a off-market or proprietary deal, you're talking 6 months probably. It's a much longer process than a traditional auction process where there's an investment banker that's speeding things along. They're pressing potential buyers for indications of interest or letters of intent. It's a much more structured process when there's a third-party intermediary involved, a banker.
Yeah.
With us, I don't rush folks ever because I'm not in a rush. And I Yeah, I'm patient. If it takes 3 months or 6 months, so be it. I mean, that's just, again, these folks have businesses to run. So, but within that time frame, John, there's a good chance that they've reached out to a buddy that's in private equity, or a buddy that's an investment banker,
Oh,
or a
you're worth so much more.
buddy that's an attorney. Those are the worst. I'm just joking. To all the attorneys out there, or CPA, or things of that nature. I mean, listen, most folks, when they're approached, if they're serious, they're going to reach out to their accountant. They're going to reach out to their personal attorneys, folks that they have relationships with. Maybe it's their buddy at their country club, or their golfing buddy, or tennis buddy, things of that nature. So they're going to reach out and they're going to start having conversations. There's a ton of information, like this podcast, for example, that's out there on the web that you can do research on. And a lot of entrepreneurs will do a lot of research and come back to me with numbers that they found on the internet of how much they think their business is worth. So yes, to answer your question, there is certainly back and forth. I've had a lot of counters and a lot of back and forth with founders. Again, we try to be fair from the beginning. I'm not a value investor, so I try to kind of put my best foot forward from the beginning. And if it works out, great, and if it doesn't, no big deal. We're still friends.
Yeah. How does that conversation go with your partners? And because you've been in this role before, you take deals. You're the deal guy, and you take them to everybody. So you're probably pretty good at justifying a price and why we should buy it or why we shouldn't buy it.
Yeah, well, I think if we've gotten to the point where we're providing them with either an indication of interest or a letter of intent, here's our number. We've already done a lot of research. We've already had a very, I would say, detailed conversation internally, and we've hashed all that out. We've had those internal debates or healthy conversations where, hey guys, this is the reason why I really like this opportunity, or this is the reason why I think we should invest in this business. And so there's a lot of healthy back and forth, a lot of healthy dialogue, a lot of questions. We talk about merits, risks, and opportunities internally. We talk about the management team. We talk about the founder. We talk about the whole opportunity. So a lot of that's been already accounted for in our proposal. We think that our proposals are pretty thoughtful and meaningful. They probably take a little bit longer to get to these folks than maybe a traditional private equity firm would, is because we do take, it's not significant, but we do take a lot of time internally and really put a lot of thought and analysis into our offers. Our offers are pretty comprehensive, and we hope they're in the best interest of everyone that's involved. That's our goal. But there is always that back and forth internally and externally. So yeah, I play matchmaker at times for sure, but if we end up signing a letter of intent, hopefully all parties are obviously happy with the outcome, and especially if we close an opportunity, all parties are very happy.
Yeah. Let's talk about some red flags that you see some of the deals come across, and this could go back to HIG and Peterson and everything. You've seen some deals like, no, this is a huge red flag, let's just avoid it. But everything else looked kosher.
Yeah. Well, one that comes to mind is, well, this is an interesting story. So this has actually happened to me twice, ironically.
Twice? Yeah.
Twice. And once we didn't mind, well, I'll tell the story. So I've gotten letters from individuals that are anonymous individuals prior to us closing a transaction that weren't necessarily nice letters, and they were referring to the seller or one of the folks on the management team. And so I've actually received, I think one was from an ex-girlfriend, and the other one was from an ex-business partner. So those are certainly.
How did they find you? I mean, it's like.
Yeah, it was obviously someone that was very close to these sellers, because they knew that they were talking to me and my firm at the time. So they were able to reach out. My information I'm pretty visible on LinkedIn and things of that nature. So somehow they got a hold of me, and they wrote me a letter. And it was certainly, when you open that letter and you start reading it, your eyebrows go up and the hairs on the back of your neck go up, and then there's a lot of discussion internally on what to do next. So
yeah. And what did you do with that information?
Well, in one instance, we ran away. It was a pretty bad letter.
It was changing that
Well, there was a little bit more to it, where there was some merit behind that letter, and so
Yeah.
we were able to kind of do a little bit additional digging, and we found out that there were some skeletons in the closet, as they say, with one of the individuals involved in that particular transaction. So it was a hey, thanks but no thanks. Just and to be honest with you, it's looking back on it, it was the right decision, I think, for both of us, both parties involved. So that group and individual ended up having a great outcome with someone else, and it just wanted to, I don't think it would have been the right deal for us. And then the other one, we had built up a longer term relationship with that individual, where we had known him for over a year, and we felt comfortable moving forward, just given our trust that we had built, and personal rapport, and again, really trust that we had built. And so we were able to talk about it and have a very direct and open conversation, and it actually worked out really well. I think we got to know each other even more than we thought we needed to. So
Yeah. Was that a case of he's not trying to be nefarious and hide stuff, that was just naively didn't bring it up to attention because he wasn't thinking about it?
Yeah, no, I don't think there was certainly nothing malicious there. So again, we addressed it, and so if there was something malicious or misleading, or if there was any, if someone lied to us, then, or was like purposely trying to hide something from us, then that's just, I mean, that's something that I don't think would be a good cultural fit for us at NextSparc.
Yeah.
So I just don't. That wasn't the case, John. And so we were able, again, to have a very healthy conversation. It was a little uncomfortable at first, but then it actually turned out to be not an issue at all.
Yeah. So what about best deals, fastest deals? What and kind of summation of like how long does it, with a family office, does deal flow take and from first reach out to acquisition?
Sure. Yeah, I think so. Some wins that I can think of over the last 3-4 years for us are, we've actually had a couple instances where we've made minority investments in companies, high growth businesses, high margin businesses, and they've needed that extra capital, whether it's from us, and we don't really necessarily invest alongside like 50 or 20 or 100 other people. It's maybe us on a minority investment and maybe one or two other firms or individuals. But they've needed that growth capital to kind of get to that next level. They've been able to make a couple key hires, and then we've just watched the sales skyrocket. And so growth is certainly accelerated because they were able to use the capital that we provided for growth. And then in both instances that I'm talking about, they were approached by competitors and offered unsolicited LOIs, unsolicited bids that far exceeded their expectations. So we had relatively quick exits, which was fantastic. And so I think, just by us getting involved, helping them, again, both cases, we helped them hire talent. We helped them with key hires that they needed to make. We helped them vet those individuals out. And once those individuals were inserted into the company, they hit the ground running. And I mean, it was just the growth. The growth was tremendous with both companies. So Great outcomes. So that's a direct, quick win. And I think a longer win for us is one of the companies that we've been involved with for a long time. It's a company called FlexJet. FlexJet is a very large private aviation business. And private aviation, I think COVID did a good job of accelerating that trend along with a lot of other trends. But that business has grown, and we've been involved with that business for over 12 years. And so that is a product of the demand for private aviation went through the roof during COVID, and then it really hasn't stopped, at least for our business. So we've been able to be a part of that business for a very long time and watch that business grow from hundreds of millions to billions in revenue over a 12-year period.
Wow. Is that a competitor to NetJets like Jesse Itzler, or is that a different? Okay.
It is. Yep. FlexJet is a competitor for sure. Yep.
Interesting. And do you own the jets, or do they're leased?
So it's a combination of both. Some jets are corporately owned, and some are owned by individuals, and there is fractional ownership as well.
Yeah. And let me go back to your minority investments. Is that just a minority investment by itself, or is that another buyer needs a little help closing the business and you bring it's a capital call to you?
No, it's typically, it's typically us. It's either us leading, a minority round. I don't say we participate in like a traditional venture rounds. Like I'm not going to lead a B or C or D round. We will back first. We will back, startups if we know those individuals. But typically, it's more growth capital. So it's not necessarily a traditional venture round. It's, hey, my company's doing 5 million or 7 million in revenue. I need a couple $1,000,000 to make some key hires, to implement some technology, to maybe develop some more software, and those things cost money. We know if we do X, Y, and Z, those three things, then it should lead to significant growth because right now we just don't have the capital to do it. We're growing as fast as we can, but if we had $2 or $3 million, we could certainly accelerate the growth.
Yeah.
So those are the types of, it's not maybe necessarily a traditional venture round, but yeah, maybe it's us and another family office, or it's us and another venture or private equity firm, or it's us and maybe some existing shareholders, some folks that participated in the first round of funding. And we heard about it through our network. We heard about it through one of the board members. We heard about it through whomever. So we will participate, John, with other individuals and other firms. But what I'm not going to do is be one of 50 individuals chipping in a couple 100,000. That's not what we do.
Yeah,
there are companies that do that, but that's not our preferred style of investing.
Yeah. Let me ask you about the people, the experts. Do you have a group of experts that you just call on hand, like the free agents? Say, hey, come in, put this in place, do this, and take off, or do you have to go hire and interview and all of that?
Yeah, no. So we will typically, if we get into an industry that we don't have as much expertise or familiarity with, we'll absolutely reach out to our network, or we'll absolutely reach out to folks that we think can help, and we'll tap into our network and say, hey, do you know anyone that has experience in this space? And so we absolutely will work with outside individuals on a deal, especially if we're making a large investment. We'll talk to consultants, and we'll do all the expert network calls that a traditional private equity firm would do. But I think what we will do is we will reach out to our network, and if there's an individual or individuals that we think can add a lot of value, we'll absolutely be open to putting them on the board or giving them a piece of the upside where, hey, help us out with diligence, we'll give you some equity in the business, or help us out, we'll give you some upside at exit, things of that nature. So we love partnering with industry experts or operating executives. I think we've done that in the past, and we certainly will continue to do that in the future.
Beautiful. James, I really appreciate your talking about the family office and the process. Thank you so much.
Yeah, John, pleasure being on the podcast, and hopefully we can do it again soon.
Sounds great.
All right. Take care.
All right. Hold on.
Bye.